Hey everybody, Q here with Charting Discovery on Wednesday, June 26th, 2013. And today I have a couple of, I like to call them Cramer Contrarian alerts for you. So every once in a while I like to check and see what his recommendations are and put them on my charts and see what they say. And sometimes we get a stark contrast. Alright, so here we're looking at LINE. And right here on this day, Cramer suggested this stock to be a buy. And I gotta say, first of all, that takes either huge balls or total ignorance of what the stock has been doing, or huge balls to just say buy it after it's dropped that much. And short term, yes, he was correct, because the stock did go up quite a bit, from like 31 up to about 34.50, where it's at right now. So short term, yes, he was correct. Too bad he can't go back and now say sell it, because that's what I'm strongly suggesting. This here is a gravestone doji, and this was today's price action, and it's closed now. And this doji, we opened up at the lows. It's a gravestone doji. We opened up at the lows. Throughout the day, the price went up and just barely touched the 55-day exponential moving average. And then we came down off it and closed right about at the low of the day, also at about the open of the day. So that tells me that this uptrend is most likely going to reverse, and we're probably going to start going down again. If anything, this chart is not a buy. This stock is not a buy, so I just wanted to point that out. Alright, and this was a recommended buy from Cramer on June 26th. That was today. Or that was yesterday, I'm sorry. The 25th is when he recommended this as a buy. This is definitely not a buy to me. I'm looking at this. Green line is the 89-day exponential moving average. And you can see yesterday we closed through it, went through it and closed. Today we played around with levels above it and ended up closing underneath the open and underneath the average itself. That to me is a high probability that there is a high probability of further down movement in this stock. And this again was a buy from Jim Cramer yesterday, and I'm contrarian that. And the last one I'll show you is O. So this is also a recommended buy from Jim Cramer yesterday right here, which is actually short term, pretty good idea. Short term meaning you can see what happened here when we got close to this 144-day moving average twice actually, and also to the lower 34-day envelope. So that's what I'm looking for next. It'll probably go up and interact with the 34-day, probably come close to this 21-day, the red, and most likely continue down unless it starts to consolidate. But again, that's in the future. First it's going to come up, and I want to see the price action between these two levels when it interacts in a week or two. Okay. So those are my Cramer Contrarians for today. Now I'd just like to point out a real estate market to you. So hold on one second. Alright, now we're looking at DRN, and this is a real estate ETF. And you can see the recent price action came down through all the averages, started a decline, downward trend. After the decline, it started trading below the 144-day moving average, couldn't make it through, couldn't close on top of it, and then finally the lower 34 envelope came down and just touched it right there. And then the following day, boom, we tanked. The following 2 days we gapped and we tanked. Then after that we had some consolidation, and also that did coincide with the markets crashing, but it's very interesting how it happened right at that moment. So then we've had a little consolidation just like the markets, and next thing I'm looking for is the interaction between the lower 34 and the red, which is the 21-day moving average. So if you ever hear that real estate's making a comeback, don't you believe it? Okay, let's look at IYR. Same story. This is another real estate ETF. Same story, down through the averages, trading below the 144-day. And these are very telling dojis because they interact with the 144-day. They just barely touch it and then come back down. And you can see right as the 21-day moving average came down, that's when the stocks tanked. And again, we're consolidating a little. It does not like to be below this lower 34 envelope or above. So that's real estate. Not a pretty picture for the future so far, or in this moment. And while I'm here, let me just quickly show you the Dow Jones. You can see the uptrend that we've had recently, bouncing off of the 34-day moving average right in the middle there. Then we started to consolidate, move down to the Then we started to consolidate, move down to the 89-day moving average, and now we're playing around between the 89-day moving average and here's the yellow is the 55, and the red is the 21, and the blue is the 34. So that's kind of the range we're playing with right now. My guess is that we're going to touch one of these levels here and then tank down again and probably touch this 144-day moving average. That's my guess. But that might be even next week, and today's Wednesday, so who knows what's going to happen Thursday, Friday, and then next week. But that's my guess right now. All right, I'll let you guys go with that. Just wanted to warn you about those Cramer Contrarians. Nothing against Cramer, I'm sure he's a great guy, but if this is your money and you need to see these charts before you commit your money to something that you can't see. So check back here before you make any moves. Don't make any moves based only on this, but check this before you make any moves. Cool. All right. Have a great one. Bye.